This is The Hard Naked Truth with your host, Michael Jeffries. Each episode, we bring to you industry experts, disruptors, business owners, and even a few financial superheroes. It's time to let your guard down, embrace the naked truth, and conquer the financial jungle like never before.
Welcome back to another enthralling episode of The Hard Naked Truth. I'm joined here today by Steve Bourne, Queensland State Manager of Lending Association, or LA Group, and Dallas Webcke, Partnerships Manager. Work fairly closely with Dallas, and I've known Steve and Dallas for quite some time now. We've got a great partnership between We Love Loans and Lending Association. Plenty of opportunity there that we're growing out and continue to work on, and very excited about where we can take things. These guys aren't your average finance brokers. Between them, they've seen every kind of deal, disaster, and dream come through the lending world, from home loans, investment properties, development finance, private lending, SMSF funding, all the way to helping business owners refinance, restructure, and even rescue their companies when the banks say no. So welcome to the show, guys.
Cheers, mate. Thanks very much for having us.
Thank you for having us.
Awesome. So, Steve, you've worked across retail, commercial, risk, and now leadership. What was the moment you realised lending was your thing?
Look, I guess if I go right back, I joined the bank when I was 19 out of uni. Did a commerce degree and wasn't really sure where I was going to go. So I started as a teller. And to be honest with you, mate, I was a pretty bad teller.
Okay.
So I knew what I wasn't going to be in the bank. And one of the managers said to me, hey, mate, you can talk to people and you can build rapport. So maybe you should get into lending. And
you shouldn't be counting money at the counter? Or,
not counting money, mate, not counting money. I should be giving it away, not bringing it in. So got into lending then. And, I think it was one of those things that I just grew from, retail lending and residential home loans. And then, as you said, over the last 25 years, from first home buyers right through to development towers and everything in between I've been a part of. And it's just amazing that, the type of transactions that we continue to see. And I think that's one of the best things about our group is that ability for us to, no matter what the transaction looks like, find a solution for it and work with the sponsors or the customers.
Yes.
And, that relationship that we've got with We Love Loans is, great and, one that we want to continue to build on.
Yeah, fantastic. And Dallas, you're the partnerships guy.
Yeah.
So what was your first job in finance and how did that shape you to work with people as you do today? Now, I mean, you're a great partnerships manager, BDM, you get on with people, which, is a big plus and stuff, obviously. Yeah.
Yeah, certainly. It's probably not dissimilar to Steve. So as a young fella, straight out of school, I joined a major bank, cut my teeth working around the country areas of Queensland.
Yep.
After a period of time there, I left and joined a related financial services business, which really set me up for where I am today. So from there, I joined another major bank, which sort of put me in front of third parties.
Yes.
And so working with third parties was all about relationships. So that's where I come across Steve, and we worked together at that organisation. And I spent 20 years there.
Okay.
Along the way, I also met our founder, Bill.
Bill, yeah.
Who we all know. And so from there, I decided, 20 years at that organisation was enough, and it was time to take a new challenge on board.
Yep.
Landed with LA Group a couple of years ago, and here I am today as a partnerships manager in Queensland. My strength is actually getting out and talking to people and understanding people. And one of the great sort of, bonuses of my role is that every day there's a new challenge coming along, and it gives me an opportunity to help people with their finances or getting them a solution, no matter how complex it may well be, or no matter how simple it is. It's just good to get help for people, help people every day.
Yeah, and structuring the deal for them and everything.
And I'm not so much involved in the application process.
That's probably a good thing, though, isn't it?
Yeah. I tend to be more on the positive side, as Steve will allude to. But it's I've got a great team that sits behind me, and they're the ones who work with our clients every day. Yeah,
I just got off the phone with one of your team, David Reed. So he's an absolute legend, and he's been fantastic for he's doing a lot of stuff for me personally at the moment, and he really knows his stuff, and he's been really good to deal with. Yeah,
Great to hear.
Yeah. just the banks and how much information they want. It's not the most fun part, but
mate, it seems to be getting worse, not better.
Yeah, I know. I couldn't believe it. You see, yeah. So this is obviously the hard naked truth. What's a hard naked truth about lending that we could know that most business owners or even home buyers don't realise? Tough question.
Something that they don't know.
Mm.
Look, I think one of the things that I would say that maybe people don't know is that the range of solutions that are actually out there.
Yeah.
Like they might have banked with one bank, whatever it may be, whatever their bank is.
Yeah.
They might have talked to them and think that, well, that's the only solution that we've got.
Yes. Yeah.
Well, I think one of the things people don't realise is actually the range of solutions that's there today.
Yeah.
And it's about that initial conversation and finding out where are they and where do they want to go. And I think more often than not, if we can't find them a solution on the day, we can set them up to find a solution in the next 6 months.
Yep.
And put them on that path. And I think that's one of the things that's really changed in lending and broking.
Yeah.
And I think I would also say, particularly now in that commercial SME space, we're just seeing broking grow exponentially in that space.
Okay.
And that, you just spoke about Dave.
Yeah.
An ex-senior commercial banker, really successful, has come across into broking and now has that ability to actually give solutions for 60 lenders.
Yeah.
Not the one lender that he used to work for. And, it's one of the things he will comment on regularly is that's a deal I just would have said no to.
Yeah.
When I was back.
Yeah, you would have just gone, it's too bad.
It's too hard. Doesn't fit. We're out. So I just think that's one of the things that's, really, really important is let's just have that conversation and make sure that, we are exploring what it looks like. And, I think we'll be surprised the times that we can get a solution. And
building out building out that whole game plan and stuff. It's quite a good process and document. And I was talking just yesterday about this in relation to and the various products out there. Is that because a lot of people go, I've got to be in tier 1 bank or tier 2 or something, and it does, and they go, well, I don't want to be paying 8%, 9% or 10% or something. You go, well, it depends on the overall whole game plan. Even if the funding might only be for 6 or 9 months, and then you can refund it into tier 1, tier 2 if you want to, or the cost doesn't necessarily have to be the driving factor. It's about what the outcome is you're trying to achieve. Yeah.
Absolutely.
Look,
you go, mate. Go.
I was just going to say it's not easy for clients, to pick the right lender when they're going to make a decision around whether it be a residential loan or a commercial loan. So they'll waltz up to the bank that they know where they've held their their savings account, their transactions account, may well have done business there before.
Yeah.
But what they don't understand is the risk appetite of a bank is always changing. It's always moving. Month on month, policies are changing.
Yeah.
So they will, walk into the bank thinking, I'm going to be right to go here. And they get told a no.
Yeah.
And they don't understand that no.
Yeah.
So that's where, any client dealing with a broker, a really good broker will do that homework for that client well before they go direct to a lender. So we'll go and approach 4 or 5 potential lenders that we think will fit the customer profile, and we know we're going to get the right answer.
Yeah.
Poor old client doesn't know that when they walk into their corner branch and they get told no, and they walk out thinking, why wouldn't they help me? They don't understand that. So we can take that sort of frustration, that pain, that disappointment away.
How many of the retail punters do you reckon that happens to? They've been banking with which bank, CBA or Westpac or whoever, and they go in and they go, they get spoken to the tellers. Obviously, all tellers are salespeople now, and all those big banks, and they say, do you want to get a house loan? And then they get that hard no, and they go, fuck, I'm not going to be able to get my dream house or my first house. How many punters then probably don't take the next step? Or
oh, mate, I reckon there's plenty, and I think there's 2 parts to that. It's one is sometimes the customer will go in and potentially not ask the right question, so they'll do it in the manner that they think is right. Equally, on the other side of the counter, it might not be an experienced person who's actually taking the inquiry. So you actually get a bit of a double whammy there. So I don't know whether I could give you a number, in a percentage, but what I could say is we have plenty of clients who come to us who've said, I've been knocked somewhere.
Yeah.
And we will put them to tier 1 lenders on, really sharp rates, really good deals.
Yeah.
Or equally, as to your point before, it's actually about the solution and what are they trying to achieve. And if it means it has to go to a second tier or, a different funder to start, it doesn't mean that they're locked in there forever. We refinance them in 9 months or 12 months or whatever that looks like.
Yeah.
And then again, it's actually making sure that they're in the market, they're getting what they're after.
Yeah.
And it's about that solution that we're trying to provide, as opposed to, and again, I'm not here to knock banks that, they do a great job. We lend their money out every day, and without them, we don't have a business.
Yeah.
But I do think there's a skill set there that can be lacking sometimes.
Yeah, definitely.
And I think that's where brokers come into their own.
Yeah. And lending association, as a group, your big power is the number of teams you have that specialize in each different product, and the knowledge across the whole group is, and I don't want to knock the solo broker or the small business guy, but that's one of the struggles I think they have, is knowing to be able to have the breadth of knowledge across products. I think the ones that are good are where they probably niche into maybe resi lending and they don't then touch equipment finance and commercial and dev, but to be able to provide all the solutions and the best access to clients, I think that's where Lending Association LLA comes into its own.
Yeah, look, one of our real strengths is when a client does come through to us or is referred to us, we take the time, and we generally do this straight away. We'll have a meeting with the client and take the time to really clearly understand their financial position, their financial needs, where their goals are heading.
Yep.
From there, once we fully understand the client's position, we can then refer that client or align that client to a person in our business who can write the type of lending that they need. That's the first part of it. And the second part of it is they will also have the relationships with the different lenders to enable that transaction to flow smoothly. So when you hear of organisations talking around, brokerages talking around, we've got 60 lenders on our panel.
Yep.
In reality, you probably know 4 or 5 are, plus a couple of second tier, plus maybe a private.
Yep.
Due to our size of our business and the scale of our business, we are probably dealing with, Steve, 30 lenders every day in depth.
Yep. At the senior level.
At the senior level.
Yeah.
And then you've got your your private funding space as well, which is another space that we play in. So, knowing where to go to get the right solution for the customer can't be underestimated, because one thing customers will do is, if they do get knocked back and they're trying to sort the problem themselves, they'll trot off to the next organisation, and guess what? They get knocked back there.
Yep.
And all the while, they're affecting their credit score.
Yeah, because they're getting a check
Bloody
on their
everyone.
file,
Everyone looks at their credit files.
You had an inquiry here, there, everywhere. You basically shop.
So it can be a real punish if you start to go to multiple lenders and you're picking the wrong one every time.
Yeah.
And by virtue of that, there's probably something there day one that we could have identified and said, okay, we just take all those lenders out of play.
Yep.
We go straight to here, because that's where we're going to get you the best result.
Yep.
Yeah, and I think what you spoke about there about that scale. So we're Australia's largest privately owned mortgage broking business.
Yeah.
So we can really have a specialist in any scope of the lending landscape. So whether it's, as I said, first home buyers, investors, developers, private money, and I think that, again, not here to knock anyone, but unfortunately, if you're a single man operator, you just don't have the bandwidth to do it all.
No,
there's only so many hours in the day.
That's right. It's capacity.
It's a capacity issue. It's not a competence issue. It's a capacity issue. So, I think that's important to understand as well.
Yeah, definitely. So, getting onto the Australian lending landscape at the moment, obviously we went up to a high interest rate environment. We're starting to peel back now. The first cut was passed on by the banks. So there was commentary yesterday suggesting that they may not pass on the full cut this time around, if there is a cut, and where do you see things are at, and where do you see, and there's obviously things like there's a lot of first home buyer incentives coming to market, which is obviously going to pump up the lending space as well. You're seeing stuff happening. The Queensland government's announced the deposit. I think the first home buyers the scheme will be like only a 2% for the first 1,000 they're doing at the moment. That's obviously going to push up not only lending but the property market as well. Again, I can just see the property market, especially Southeast Queensland. My opinion is going to keep pumping from where it's at. But I
think we share your view. So I think the first thing is we do think that rates will continue to come back. That's our, that's our opinion. whether you touch on a point, do the banks pass the full amount on?
Yeah.
I think that'll be interesting. I think it would be a brave bank who is the first one not to pass it on.
Yeah.
I think that will be very interesting if that plays out. There's probably a few things overseas that are a bit kind of up in the air at the moment. I think there's some international forces at play that it'll be interesting how that plays out in the short term. But I agree with what you're talking about. So the government is pumping lots of money into first home buyers. Those incentives have been extended out. They were supposed to end 30 June, on Monday.
Yeah.
Kick that out another 12 months for new home builds, at the $30,000, minimal deposits, as you spoke about before.
Yep.
But I actually think the problem in Southeast Queensland in particular is supply. We just don't have enough supply.
Yeah. It's massive problem.
It just that for me is the issue. And it's just simple supply and demand.
Yeah.
So you've got all these first home buyers who are getting propped up by government stamp duty rebates or stamp duty exemptions.
Yeah. Stamp
duty exemptions, $30,000 incentives. However, what we don't have is the land to actually build the new homes. So I just think that, we will continue to see it pump up. The prices I think, overall we've got a supply issue in Australia, but I think, if I just concentrate on kind of based in Queensland, so I just use that southeast corner as my kind of specialty patch. I think you're spot on the money.
Yeah, and obviously Brisbane's working towards the Olympic Games and stuff, and what happens generally with property prices. It's interesting, because I jumped in the car yesterday afternoon and went out to Mudgeeraba to have a look at a house that's on the market, and it was a 1,100 square metre block, and my view was to see if I can knock it down and put some duplexes on it, the right price. And I reached out. I've got a friend on the Gold Coast City Council's in town planning fairly high up, and asked him about it. And he goes, mate, it needs to be minimum of 600 square meters each, and on a corner block for dual occupancy. And I go, mate, there's fucking there's, as you said, there's a supply issue here at the moment. It seems crazy that the council isn't doing more to alleviate
it's
that.
like the rest of the world is playing against the fact that we need to get
I'm trying to supply
community.
2 on the one block, and you're not helping me.
But they'll do a new land subdivision and there'll be 150 square meter
exactly
blocks.
So
it just doesn't make
sense at all, does it? No.
No.
So is the bank says no situation still common, and how does the Lending Association approach that differently? And I guess we sort of covered that off a bit before, in relation to getting the right options and game plan before you're approaching a lender, and making sure that the product fits and stuff.
Yeah, and I think Steve will confirm this, but the one thing, and we have spoken about this already today, is that we won't go to the lender until we know that they're basically committed to approving the loan. So we take the time to do all of that work that we need to do to make sure that once we hit the go button on lodging the application with whichever lender we've chosen to go to, is that we're going to get an approval. It's not foolproof. It doesn't always work out that way, but you try and take all of the variables out of that, so you do get the right outcome for the borrower in the right amount of time.
And one of the things we won't do, so if it doesn't fit, we won't just have a crack and put it in and say, hey, let's see how it goes.
Let's see the dice roll. And
and then all you do is you stuff up their credit even further by having another hit on the credit report. What we'll do is say, hang on, here's how we're going to get you fit and ready. So here's the plan for the next 3 months or whatever the time frame is, because we know if you do that, we'll get you approved. And I think one of the things we would say is we kind of look at what we call a lodgement to settlement stat, and our lodgement to settlement stat across the LA group's about 87%. So we, as Dallas said, it's not foolproof. Sometimes the valuation will come in low, or there'll be something that they've banked with that bank before and we didn't know about it, or whatever. So, but what we want to make sure is, 9 out of 10 times, if you're lodging a deal, you're getting approved and done, and we're getting you the solution that you wanted.
Okay. And where do you see, I guess, the lending landscape going over the next 5 years? And how can accountants prepare their clients for those changes?
Look, this might be a biased comment, but I continue to see brokers grow. Look, if we ever look in the residential space right now, it's around about 80%, give or take. 80% is, kind of the broker share. If you go back 7 years, that was probably more like 40 or 50%.
But it was more direct bank before that.
Yeah, correct. What I think is you'll continue to see that commercial space grow. I just think there is more and more pressure on banks to retain talent in that commercial SME space. And what could accountants do to maybe help, or maybe help arm their customers? I think it's one, just making sure that they're having the discussion.
Yep.
We see plenty of balance sheets and plenty of A&Ls where there's opportunities that are just latently sitting there that not even having a discussion about. And I think just having that, that awareness in front of mind, just ask the question. If anyone right now has got a 6 in the front of their rate on their home loan, they're paying too much.
Yeah.
And it's just something as simple as that. And again, what we will do is, if we see that there's an opportunity, great, let's do something to save you some money and get you a better solution. Equally, if you're in a really good spot, we'll tell you you're in a good spot. We'll confirm that. And in many cases, we'll go back to the same lender that they're with and get them a better rate.
Better deal. Yeah. There's a lot of people sit on, lazy rates and lazy equity and stuff, don't they? Especially property investors, you see, and you got to be more active with your clients. And it's a lazy accountant, lazy client who's not making a move in relation to it.
Yeah, who's suffering.
And we find clients will listen to their accountants. So the accountant really has, a great deal of influence on how the borrower or how the client will approach their finances. We're just here to add some more value to that relationship that the accountant has with their clients. So, we understand relationships really well, and that's something that, we continue to strive to be that for our referral partners, which are primarily accountants.
Yeah. We were just talking about balance sheets and stuff for obviously businesses, and as accountants and stuff, we deal obviously a lot with small to medium sized businesses and their balance sheets. There's what about businesses that are doing it a bit tough and stuff? There's certainly a lot of those right now, and they've got ATO debt, or they need to refinance positions and stuff. Is there solutions for them? And the ATOs now, as of 1 July, GIC is not deductible, so it doesn't. That traditionally a lot of businesses have used the ATO as a bank or as a lender, and that doesn't make sense now to do that if they can't expense and the interest has gone up, and it continues. And I think they'll continue pushing it up because they don't want, for obvious reason, they don't want large ATO debt positions. Is there options for businesses out there who are stuck in that position?
Look, we've already played fairly heavily in that space over the last 12 months. So this is something that's been building and building and building. So to answer your question, yes, there are solutions there.
Yeah.
Not every client you can help.
No, of course.
But certainly for those clients who have got the right asset base, and if they have got significant tax debt, we can look at ways to take that tax debt out.
Yeah.
And that unfortunately does go a little bit hand in hand. You do have clients that have accumulated that tax debt that is putting pressure on all other parts of their business, their cash flow and whatnot. So when we go in to look at the, taking out tax debt, we're also looking at the borrower and the business, their overall financial position. What can we do better to make it better for you moving forward? And that's when we work really closely with our accountants. So one thing I would say, never be afraid to put those clients forward to us. Let's see what we can do. Let's see what solutions we can provide. I think, Steve, there's more and more solutions we're finding through other avenues in our business, not just your normal lending solutions or tier 1, tier 2. There's other ways we can help.
Absolutely. And look, I think maybe just a recent case study, Michael, that, we had a client, it was about 1.5 ATO debt.
Yep.
Had a commercial property that he operated his business from. It was a specialist property, so it wasn't just a warehouse or a shed. It was a specialist property. What we were able to do, though, is roll out his tax debt, roll in some EF that he had as well that he'd kind of probably overspent on, and had some equipment that he probably was paying rates he shouldn't have. Capped his interest for 12 months, helped him get 12 months of kind of clean air and cash flow in front of him. And just last week, we refinanced that from a private lender into a second-tier lender, and now put him into a 20-year facility. Yeah,
which is perfect because to go into a second-tier lender, they probably wouldn't have looked at the ATO debt. They would have gone, no fucking way. And then now a debt position with a lender is different than ATO debt. So,
and probably the thing that I'd just call out on that one is he had equity. He absolutely had equity.
Yeah.
But what we were able to do is do a kind of a two-step dance, clean him up, get him fresh air, get him 12 months worth of financials where he was actually able to, operate that business without that tax debt over his head.
Yeah.
Or the payment plan, that was in place. As I said, cap his interest for 12 months. And now he's, in a 20-year facility, paying rates in the 7s on a specialized commercial.
His life's changed. He's got fresh air now. He can actually focus and concentrate on what matters
and growing his business.
Yeah.
And the turnaround we see from from day one, putting that solution forward, which may well be a private funder in the interim. And then when, by the time we go to take them back to a mainstream or a second tier funder, you can see the relief. They've just turned their business around. They're now focused on growth. They're focused on how do I move forward at a better, without all of these sort of hamstrung, so it's, that's what we see.
Yeah. And that must be a good feeling to see that too as well. Yeah.
Yeah, absolutely.
Yeah. What lending strategy do you see is on the rise right now? And obviously refinance is a big one because going from, a higher rate into a lower rate. Yeah.
Yep. And I think, look, if you went back a few years ago, there was just a huge spike in refis because there was those cash backs in the market. So, lenders were kind of just buying business, but that was always going to come crashing down. It never was sustainable.
Yep.
What we're now seeing is people refinance, I would call it true refinance reasons, so that they actually can save money, or they have got increased equity and they want to get a bit of money out to, do a reno or whatever that might be. And we are seeing, unfortunately, not all lenders are reducing what we call their back book rates. So, the new to bank customer gets one rate and the existing customer gets a higher rate.
Yeah.
And what we're seeing is that being called out more and more. So I do see that to be a continuing trend as we think rates will continue to come down at the back of this year.
Yep.
And then I think the other one is for people who've got equity, and you just touched on Mudgery, you went and saw a property. We are seeing people trying to tap that equity and say, okay, what can I do? Can I put a duplex on a block?
Yep.
Can I go and buy an investment property that, might not be an area I want to live in, but I think there'll be good capital growth over the next 10 years or 7 years as we go into the Olympics. So I do think that we're starting to see that as well, where people have had good capital growth, where they've held property for a period of time. And how do they tap into that now and, continue to create wealth?
We're seeing a lot of SF lending as well. That seems to have made a real emergence in the last 12, 18 months. And it doesn't, you don't have to scroll too far through social media to see someone talking about buying a property in, your self-managed super fund. So, and look, there's still not a lot of lenders, Bourne, in that space. So, there's some good lenders, there's some good products out there, but it's probably not well known to the broader community.
And some of the best resi SMSF lenders wouldn't be known.
Yeah.
They're not names that you would see on the street.
Yeah, that's right.
So, they do need someone who actually understands what they're looking for.
Yeah. And this is where I think accountants can play a real difference with some of these clients' portfolios, their debt portfolios. Make sure you have a look at their SMSF product, particularly if it's residential. You may well find that the rate they are sitting on is way out of market. And there's some savings to be had, or a better strategy for them to look at. So.
Yeah, definitely. I mean, I know personally, and that's one of the things I've been working with David on is getting as much lending as possible into my SMSF at the moment. I always struggle with that as well because SMS and SMSF. And so he's managed to get me pre-approval with Liberty to buy 2 properties, and I've also said to him, I go, and which would be our next stage, I go, mate, I want to be able to borrow as much as possible in trusts and my personal name right now, because I'm that hot about the uplift in the property market. Mate, see what you can get me. And I go, I don't care if we're private and up, but I want to do stuff and some small developments and a few things like that. And but SMSF's obviously great for buying commercial property for business owners, and and obviously all the way through to resi stuff as well. So yeah,
absolutely.
Yeah. And so technology, I'm group CEO of a legal fintech company, which obviously we've got about 1,500 accounting firms we deal with. We know technology is the forefront being in that, and we're doing a lot of stuff in AI space at the moment. We've got some AI apps coming out. We've got some AI stuff in Lightyear Docs, and I'm working on an AI app personally myself with one of the directors called Tax Guru AI, which is just a tax advice, tax research app. we've actually got a AI intern, second year from Griffith Uni on the coast. He's doing a double degree in AI and computer science. He's working a couple of days a week for us, and it's fantastic having someone like him. Where do you see technology going in the lending space? And, you know, is it LA implementing a lot of stuff like that? Are they starting to leverage AI in any way, or are they, you know, is there discussions around that?
Yeah. Look, I think the first thing I'd say is tech in the lending landscape has come a long way in the last 4 or 5 years. And, you know, a lender that we use quite a bit in the residential space is Macquarie.
Yep.
Macquarie have invested really heavily in their tech stack. You know, we're seeing great turnarounds. They're using multiple sources of data to make a decision rather than having to, you know, get bundles of paper or information in. So, you know, that's an example of someone who's really killed it in the market.
Yeah.
What we're starting to do with AI is play around a bit with, rather than, you know, sitting down and writing a game plan, which is, you know, kind of the solution for the clients, is how do we use AI to actually do some of the heavy lifting there for us, and then us just tweak it.
Yep.
You know, so you try and free up your resources to actually have more conversations with clients
Yep.
that enable the solution rather than getting caught in the admin in the middle office.
Yeah, which is easy to do. Yeah. And the real value is in those conversations with the client, isn't it?
Correct. And then I think, you know, probably the other one that we're seeing that we're getting probably more look through into is just the clients on, I call it ongoing data, but it's more how do we actually help them. You know, one of the things we do is we get you the loan.
Yeah,
like that's part of you know, our remit. What we're now trying to also do is use data and, you know, tech to help us understand how we get you out of that loan and help you get to the next kind of level of, you know, wealth or, you know, your goal that you want to achieve.
Yep.
So it's as much about getting you the debt and then helping you actually pay it down or get to the next part of the solution. And I think that's potentially an evolution of broking.
Yeah, definitely.
You know, not just caught in the transaction.
Yeah.
It should getting you ready and then getting you out of it.
Yeah. There's a lot of guys. I wouldn't say a lot. There's a few really sort of spruiking that service at the moment. The brokering, like I know Infinity on the Gold Coast, they do a lot of that in relation to paying down your loan in 7-10 years and beating the banks and stuff. But they're still brokers, but they're just providing different solutions in relation to how to structure things. And
Yeah.
So, and I think there's big opportunities in that space.
And I think we'll see more and more. I think more and more you're going to see the actual approval part of the lending become more data driven, tech driven.
Yeah.
And then it'll actually be more around the education piece up front and getting people fit to actually fit that.
Yeah.
As opposed to, you know, well, that's where 80% of the value is actually getting it done. I think it'll actually be 20%, and the 80% will be outside of that. Yeah.
So we were talking about earlier on. We've got a great partnership between We Love Loans, one of our businesses, and Lending Association. How important are strong referral relationships in achieving the best outcome for clients?
Look, I mean, by virtue of having the right relationships within your business, and, you know, our relationship has grown over the last 12 months.
Yeah.
We're adding value every day to those businesses by helping those clients. And that's what it all comes down to, is making sure that the client is getting the right solution, the right outcomes.
Yep.
We're able to do that through our relationship. And, you know, the network of, I guess, businesses that you deal with, you know, they've all got clients out there that we can help. And, you know, dealing with We Love Loans and understanding how they can, you know, get to you with those clients. And, you know, we sit behind there and we drive that engine. We're here to help those clients. So,
It's interesting too. Like I ran, we've started what we call the Pinnacle Unstoppable Growth Packages. We've got about 50 accounting firms we're working with, and I started, and as part of that, I'm doing regular advisory meetings with them, and I had my first 4. So we've broken the 50 into 4 groups, and I had my first ones this week. And one of the accountants in that group, he was like, and it's all about us collaborating, working together to get growth for them in their firm. And which I see that we're going to get a lot of business out of as well, and opportunities, which is, you know, big win as well. But one of the accountant was sharing to me, he goes, "Oh, you know, I really want to sort of bring in a senior accountant. I want to step back a little bit." And I love, he's got a particular hobby he loves. And he said, "But, you know, I've got to look at my referral partnerships." And he goes, because the ones I'm dealing with, I'm not getting referrals back, or I'm not getting any referral fees or anything. And I said, okay, well, tell me about some of those. And one of the ones he goes, and he wasn't working with We Will Love Loans, even though we've done so many webinars and we've provided so much information out there. And one of the things he goes, I'd be writing 20 million, 30 million, 40 million in loans. I send to a broker at the moment. And I don't, I don't get any accounting for clients, and he doesn't pay. And I go, mate, I've got a solution for you straight away. And we're connecting now. I've got to send out the email today and to start the We Love Loans process. And
look, it all comes down to that trust, right? If you're gonna refer your client to someone, you want to know that the experience is going to be a good one. And one thing we talk about all the time is making sure that when we've got a client from you, let's make it so that that client goes back to you and says, thank you so much for that introduction. By the way, because of what they've done, I want to introduce some more people in from my network to your business. So that's how we think. We want to deliver the best possible outcome, so it actually drives more growth for those businesses that support us.
Yeah, no. I reckon we've really achieved that, and it's been fantastic working with LA, and and one of the things we talked about when we were going into the, I guess the marriage was, if it does, when things don't work, it's not you guys that they complain to. They come back and complain to me, and that certainly hasn't happened, and which has been fantastic, and and that's it resonates exactly what you just said.
Yeah, and look, we talk about that scale. Often. It cannot be underestimated. So, when clients are coming via We Love Loans, there's a whole team across the nation which is ready to pick up those clients and work with them. Now, by virtue of where your client or your network, it's all over Australia. Well, the good news here is that LA's got offices all over Australia. So, often the client will be actually working with someone
in their location.
And what goes with that, they understand that market, they understand the economies of scale in that market. So, it's again about making sure that the client's getting the right experience and everyone's feeling that.
And obviously, not being on about the accountants again, that's a big part of our network is how early should the accountant get involved in the conversation? I know you're talking about, Steve, in terms of ensuring that they're reviewing their client's position, but how early should they get in the conversation about finance and stuff? Our team, we've got Naked Accounting, is they're doing, as they're kicking off, it's 1 July now, they we're just not just delivering tax compliance services. They really put a big presence on the advisory space, and so they're reviewing A&L's balance sheets and anything in relation to that, and then looking at opportunities to help the client. Is it then, should they, how often do you see that they should be part of?
I mean, I deal with some accountants that have checklists. And that makes it part of the conversation whenever they sit in front of the clients, whether that be quarterly, is it half yearly, yearly? So I don't think there's any wrong time to talk to a client about saving your money, but I guess it's having that conversation and having the confidence to have that conversation. Finance is not always easy to talk about. And it can be very, very emotional, which we see every day. So,
Well, and I also think, to answer your question, when is, I think the earlier the better is my answer, because what we find is when we can do something with an accountant, it doesn't quite fit the 9 dots, and we've got to go back and have a discussion with the accountant and work with them to understand, the business better, or the financials might not actually be a true reflection of where that business is going in the next 12 months.
Yeah, that's right.
I think that's really important for us to have that kind of triangle dialogue, client, us, and the accountant, because the accountant generally is the most trusted person in that client's relationship.
Yeah, definitely.
And I think what that does is that just elevates us along the way, because the accountant and us are on the same page. But it also means that we can represent the situation much better to the lender. Because what we've gotten is we've gotten it from the horse's mouth, and sometimes when you talk to clients, you get a little bit lost in translation. And I think sometimes the most valuable conversations we have with the client is when it's three-way conversation with the accountant, us, and the client.
So when a client's on board with us as well, and the day that loan settles, that's the start of the relation. That is a continuance of the relationship we have with that client. So we stay in regular contact with the client. We make sure their product setting is right. We make sure their pricing is at the right end of the market. that also brings to a head whereby that client may be looking to do something else. And that's when we re-engage back with our referrer to say, hey, they're potentially looking at buying a property in a self-managed super fund.
Yeah. You should
talk to your accountant.
Yeah.
You know, so that's how we view relationships with our referral partners.
Yep. How can accountants and brokers work more effectively together to provide a more holistic financial advice? You know, what tips do you have for fostering this collaboration?
Oh, mate, look, I guess the first one is just make sure you're having the conversation about debt.
Mm.
So I think, and maybe this is more when I think of planners actually than accountants, but sometimes, you know, we work with accountants who only want to review one side of the balance sheet. You actually got to have a look at both sides of the balance sheet and make sure that they're, you know, kind of both being reviewed and both, you know, appropriate. I think the second one is wherever possible, if we come back to accountants and, you know, we want to ask questions or we want to engage or we want further information, it's only for the benefit of the client to try and get the solution.
Yep.
And we know how busy you are. You know, you've always got key dates that you've got to hit. You know, it's not just 30 June anymore. You've got key dates throughout the year that, you know, you got to hit. But I think, you know, how do we sometimes open up that dialogue even more? That would really help us in certain situations.
Yeah.
You know, just as you and Dave, you know, are talking, because you are the client and the accountant. Yeah, it's much easier. But sometimes having that accountant lens on things really helps.
Yeah, and I think the accountant also got to realise that if they're providing a service that's of value to the client, they need to be charging for it too. Like instead of I see accounts in there like, oh fuck, the broker keeps coming back and asking for more information. I've got to put this together and stuff. And I'm like, well, you should be charging for that. Like if you're providing a service for the client, and yes, you might be getting a commission or a referral fee from the broker, but that doesn't mean you can't charge over and above that for creating a financial forecast or a cash flow. Yeah.
Look, and one thing I would say is don't assume because, you know, they're a top 10 client with you that everything's right in their finances, in their financial world. We are seeing more and more clients, which I would say are more of that relationship banking style client who have had relationship banking with their bank in the past, have a variety of different products and structures and whatnot. Quite often those clients are really stuck where they are at and need that help.
Yeah.
So we are seeing more of those clients, which you wouldn't think you would necessarily see as a brokerage. And much to Steve's point, that's the change we're seeing with businesses and commercial type clients, that they are turning to brokers for help and support. So the one thing I would say is don't assume that every client that walks through your door who you think you know really well on their balance sheet side of things, but don't assume that everything's right in their financial world, or don't assume there's not savings to be had.
Yeah.
I don't know any client that won't say, thank you, you've just saved me, you know,
exactly
20 grand a year in interest, or you've just cut my repayments down from 5 grand down to 3 grand. I mean, what client's not going to say thank you very much for that?
Yeah.
You know?
So I think that's a really good example, Dallas. So some of the more complex or mature businesses that you think have got good relationship banking with major lenders, I think there's absolutely something in reviewing that every 3 to 5 years.
Yeah.
Because the business that it was 5 years ago is not the business it is today.
Correct. Yeah.
Therefore, either the relationship manager they're with, they potentially could have outgrown.
Yeah.
Or that relationship manager changed. And I actually think that, you know, we've got lots of examples where people thought they had a good deal. They thought they were in the right, you know, kind of product set or structure.
Yeah.
But we've actually been able to have a look at it and actually put them into a far superior position. That's actually enabled growth.
Yep.
So it's not just about, you know, what's happening today and how we going on. It's actually about what are you trying to achieve in the next 2, 3, 5 years. And I think there is something about those, you know, major clients or significant clients reviewing that position regularly.
Yeah, definitely. Look, one of the things we do is we do a value gap assessment each year with the client we send out, and we can take that to full business valuation, which we do with some clients, and we work through all the levers and everything and go, this is where we think your business could be worth, and if you need to work on this in the next 12 months, and we might meet monthly or quarterly in relation to that, and funding plays a big part in that conversation too. So, and it's really important that you are helping that clients get to where, you know, especially when you're talking about succession stuff and everything, and you know, because a lot, especially small and medium business owners, size business owners, but sometimes their biggest asset is their business, you know, and, you know, so they need to maximize that and also have a plan in place on how they're going to exit and in relation to that.
Yeah.
Mm.
Yep.
I guess just and further to Steve's point around, you know, the more complex clients and whatnot. I mean, hence the reason we've got brands out in the marketplace now, which are part of our business. You know, AgriFin. We've got Doctors Only, LA Private. These are all teams designed to help a certain type of client who expects a certain type of service.
Yep.
So, you know, this is again, I guess, filling a bit of a void where these clients once upon a time had their, you know, a relationship person ring them every month or every 3 months, check in on them, make sure everything was working for them. You know, we've sort of taken that place a little bit, and hence why we've got specialists in those, you know, those areas.
Yeah.
And that's to service those clients. And, you know, we continue to see enormous growth in all those areas I just mentioned.
What happens when you see, you know, we obviously, you know, and I'll pick on tradies here a little bit, but it's probably not fair. As you know, they love their punting, they love their beer, and they
just not tradies, by the way.
All their
you're looking at two here that enjoy both of those.
Same, mate. I've got a horse race in the sunny coast and the Sunshine Coast Cup this weekend, but
it's time for that horse to return.
I know it is. Look, hopefully we get some dry ground. We've got a good barrier draw today, so we're in barrier 4, so that's a big tick. You know, and you know, obviously lenders don't like to see that. Is it a matter of putting a strategy in place to say, hey, you need to clean up your behavior, or is it using different bank accounts or
Yeah, look, mate, I think there is a bit of, you know, so if you decide, yeah, you know what, I'm going to put some money away and we're going to buy a house, or you know, we're going to refinance, or we're going to sell this one and upgrade or whatever.
Yep.
There probably is a window that you need to maybe just understand.
pull your
head in.
Yeah.
Or the other way is that you can run multiple accounts, okay?
Yeah.
So, you know,
different banks,
just
multiple, yeah.
Exactly. And they do look at it. So to answer your question, it's real. They do look at it. If they see sports bet, you know, withdrawals every second day, then you know, they are asking questions.
Especially if it's losing, if there's no sports bet deposits.
No deposits.
Yeah.
I've heard some of the questions asked of the brokers, and you would laugh when you hear, you know, some of those transactions, the questions they'll trigger from an assessor at a bank.
Yeah.
As to, hey, what are you doing with your money here? You know,
Yeah.
so
and that's part of that tech piece. The tech is actually, you know, so we're using tech, you know, for to take away inefficiencies. But banks are using tech also to actually get a deeper understanding and, you know, classify spending habits and behavior.
And I guess on the flip side, in terms of income and stuff, we on Naked Accounting, we obviously we don't niche into a lot of markets. Our targets are small to medium sized businesses, but we certainly have on our books some clients who are in the space of OnlyFans and everything, and you see they earn significantly good income. I think I'm in the wrong trade, but how do lenders look? Because it's not that they're doing anything illegal, but I know that often it's they have a problem in relation to that type of revenue stream and stuff.
Yeah. Look, there's definitely lenders who are okay with it. There's lenders that are not.
Okay.
And look, I don't want to kind of generalize, but as a rule, the majors are probably a little less understanding of that.
Yep.
But we certainly have some second tier lenders, mortgage managers who are, you know, if the financials are there and the money stacks up and
it's recurring, and
we're okay.
Yeah.
So yeah, there's definitely a market for that. But it's not everyone's cup of tea. Is probably the answer.
Yeah.
And you know, it's actually interesting. Even similar, you know, we did a deal for a YouTuber the other day. You know, young fella who made significant money.
Yeah.
But a couple of the lenders were like, I can't get my head around this, and we're like, well,
what do you mean?
Yeah, what are you talking about?
Yeah.
So you know, we ended up getting the deal set, got him a really good deal, but it wasn't everyone's cup of tea.
Yep. And that's a hard thing. I mean, you got a lot of people making money from different types of revenue streams, such as digital assets and stuff now, and because they don't understand it, they don't want to touch it, and
and we're only going to see that more and more as, you know, those things evolve. And, you know, 3 or 4 income streams, and they're earning a handy income. So it's a hard challenge you face. Well, I was in a CFO role once, and we had a number of timeshare assets, and the major bank that we had our consumer funding book through,
that funded the consumer funding book, all of a sudden one day decided they didn't like timeshare anymore, and we got a letter and said you've got 60 days to pay out 60 mil, and there's about 50 or 60 mil in debt, and if they decide, unfortunately, when you're dealing with those tier one banks, if they decide they don't want to play in that space, they can just pull that card, even though we'd never had any issues in relation to the making repayments or the covenants or anything. They just
exactly, and it does happen. And so we had one the other day where they liked 40 down to 40 square meter units. They were fine, and then they just came out overnight and said, no, now it's 50. No rationale, no notice, anything that was in the system, bad luck. Just put a line through it. So that's an example again where making sure that you're kind of dealing with someone who understands as best as possible the market, so you can go to another lender, or you can
be ready and armed and stuff
to go again. But that stuff happens, unfortunately.
So Steve, leading a state team in a high pressure space, there's a lot of pressure from people who want to get their deals done and their funding through and stuff. What is your non-negotiable leadership value?
I'm not sure if it's a value, but one of the things, I guess, it's maybe a rule is bad news doesn't get better if you leave it longer. So
don't sit
on the front foot. Something for the team. Things are going to go wrong. Stuff's going to happen. It's maybe not going to play out exactly the way you want, but let's really communicate strongly and let's get ahead of that. So let's, if anything, over communicate, get on the front foot and be really open with our clients and our referrers. And that's where I think, having that trusted relationship with accountants is really important. I think that's probably the big one. Just make sure we're on the front foot. Things will go. They won't go perfect every time. That's just not the lending landscape we live in, unfortunately. But when that does happen, make sure that you're on the front foot and you're really owning it and stepping into it. That'd probably be mine, I think.
And just asking both of you, do you have any mentors or anything, or anyone who inspires you? Any books or podcasts other than Hard Naked Truth, of course, but that you would recommend to our listeners?
That's a tricky question.
I don't know about mentors. Like there's a couple of podcasts that I like. Mate, one of them's I like the Diary of a CEO.
I listen to that regularly.
So I was actually I just came down from Brizzy, so I was listening to that on the way down here.
I actually met him and flew down to Melbourne with my son, and we had a meet and greet and then watched the live. So
cool.
It was very cool.
So I like that one. Mate, the other one I listened to, it's maybe not appropriate. It's on the lighter front. There's a podcast, 2 New Zealand radio guys called Not for Radio.
Okay,
it's a belter. If you want to laugh.
Okay,
so it's not business, not lending, but it's a funny listen, a bit lighthearted if you're in the car.
It's always good to do that, isn't it? Switch off and
exactly, let your brain go.
I'm a novice in this space. I don't do any of this stuff.
Doris CEO was interesting. I was actually speaking to Rod's son's in doing a week of work experience at the moment. I took him home because Rod was stuck in the office last night, and saying to him about because he wants to go into accounting, which is my son is as well, and my son's second year degree in relation to that. But I said, Stephen Bartlett actually said, I asked Jaden, my son, he goes, so what do you want to do? And he goes, I want to be an accountant. I'd love to go into dad's business and everything. He goes, and his advice was, and we were talking about technology and stuff before, he said, mate, what I would tell you, you're at the perfect age right now. Find an AI startup, an AI company, get into it. You're going to fail. It's going to make lots of failings, and that's where you learn, which we all know. But he goes, once you've done that and the opportunity you get from that, come back to dad's business in 5 years or 6 years and put in what you've learned and go from there. And
for it.
So it's pretty good advice. So if anyone's looking for a lending product or anything and you want to get in touch, reach out, jump on our We Love Loans website, reach out to us, connect at weloveloans.com.au, and we'll make sure that LA Group Lending Association look after you. So thanks, Dallas and Steve, for your time today. It was great, and it was great insight into.
Thank you.
Yeah, mate, really appreciate your time. Thanks very much.
Awesome. It's time to wrap up another episode of The Hard Naked Truth, where we've stripped down the business world and accounting industry like never before. Follow all of our socials and share and keep following this podcast. Remember, when it comes to running a business and protecting your assets, keep it hard, keep it naked, Keep it real. Stay naked, stay truthful, and keep winning.